Hello guys, welcome to episode 2 of Liquidity Hunter Course 1. Today we're going to talk about market liquidity, market concepts, magnet concepts, Today we're going to talk about equal highs and equal lows and low resistance liquidity run and high resistance liquidity run. Let's start with equal high and equal lows. Equal high, equal lows. Liquidity zones, it's not always support and resistance. That's the reason why price most likely seeks to those areas and not use as support and resistance. Most times, if you see an equal high and equal low, you can see it more as a target, not a stop loss, more as a TP for your entry, or more like a reason why price would reverse after seeking the equal highs or equal lows. Yeah, it's more like for a standoff view of retail traders, it looks like a bullish flag most times, equal highs and equal lows sometimes, right? Or it looks like, um, yeah, it looks like strong resistance. And when price gonna get there, they retail want to see then, or they think that they're gonna see is a reversal. But no, most times it just shoots in it and takes every retail traders his stop loss out, and after that reverses or does his own thing. It's what the context about the price is on that moment. And smart money logic is these levels are not for entries, they are liquidity grabs. Wait for the sweep, watch confirmation, and follow price structure. Also for this episode, we going to make a little document with some extra info, because I didn't tell everything about this, because some really big concepts, equal highs, equal lows, low resistance liquidity ones. I will send that tonight in the Discord. This is a little document because this is one of my first times teaching someone trading on this impact. Most times it's just a friend I'm teaching, or someone that also knows trading, but people that I don't know in trading I'm teaching. So it's a little bit difficult for me to tell all the information that I know. I'm also not English. I'm from the Netherlands, so my English is a little bit broken. If you know that, please let me know. But what I'm trying to say is, if you think like information is missing, I'm telling it a little bit wrong. I'm gonna how I was gonna say, I'm gonna put everything in a document for extra information that I know. Look, this is how I look at price for equal highs and equal lows. As it stands in the middle, soft resistance, almost no resistance. What I already earlier said. Look, most times price will make equal highs, this for a more bullish perspective, if equal highs are made, and will take out a swing low right here, and after that will expand to the equal highs again, to those highs to take it out. And of course it can go higher up after that, what the context of price is, or it could reverse. Like if you are in a bullish day, and or even in a bearish day are equal highs, most it can get swept, but it will not do like reaction like this, but it will more look like this, more like this, if you know what I say. So it took take out the equal highs, and after that will reverse on a bearish day, but the equal highs are most likely to get hit. The same for equal lows. It's not support, it's just, it stands, I can also say soft support, almost no support. It's just liquidity, engineered liquidity, built up liquidity to get swept after. And even as I earlier said, on a bullish day, equal lows can get swept after that to go higher, because it's major liquidity. Look, if I have to make a scoring list of major liquidity magnets like equal highs, equal lows, previous day high, previous day low in Asia range, I was always set previous day high, previous day low 1, Asia 2, and equal high, equal lows 3. I will now show you an example on the chart. This was a trade that I took, I think, when was this? 31 March. I offered, was no. It was 2 April. I'm sorry, I'm not looking. There was a trade that I took. Also, low resistance liquidity runs are also right here used for this trade, but we're coming to that later. This is a 30-minute time frame. We're not going to talk about SMT, but about the equal highs. Look, right here, I have a question for you guys. In 3 seconds, you can pause the video. Is this valid equal highs or not? just look at it. Is this valid or not? No, it's not valid. Because it's not really equal highs. You can more say like a value swing or low resistance liquidity. Its equal highs is this. Look, it's perfectly on the almost on 0.1 pip. If there is a little bit of deviations with equal highs, equal lows, I'll use 1/10 of a pip, or most that you can use for lower time frame equal highs, equal lows. For difference, like if it would like this, I would not count it, but like this, maybe this is 1.0 pip lower or higher than this one, but this is what I count as equal highs. What price did in this price action was just consolidate a lot of times, just consolidating, taking out the equal highs, and after that I made a perfect entry in OT on an order block right here. On other time frame you'll see the order block perfectly. I will draw it right now that you know what the entry concept behind this trade was, and taking out a lot of low resistant liquidity, but we can talk about that later. Look, this is also a beautiful example after my trade, like a week later or some days later. You can see also here perfect equal highs, but if you look really close, if you're gonna look really close, it's never equal. Look, like this is a little bit just. I'm gonna count for you guys how much it is. Let me do it like this way, and go to this high. It's not even up. How much difference? Not even a pip difference. So like this, I can count as equal highs. Would it be more than 1.5 pips? I would not count it like equal highs, equal lows, because look, if I'm drawing like this, yeah, it's little smaller, but you can still count this as equal high, equal low. That's what I will do, even if a low is like that. But this is a valid equal high, equal low. If you see this in your chart, you can mark them out and see as major liquidity as it grabbed here. And as I said earlier, after it swaps or takes out the liquidity, doesn't mean it's gonna run up, because it is no resistance equal highs. No, it can also just reverse down and after that go up. Look like this. It just took out the liquidity after some time. Perfect time also in kill zone of New York. Entry concept on the order block and just shut down to discount zone. And after that, because price was for that week really bullish, fundamental globally was bullish, and the tariff, of course, of Donald Trump, price shut up and took out everything as well. I look at low resistance liquidity runs, just how I look at the chart, but I have drawn it right here. Low resistance liquidity runs, these are areas on the market that can move through really easily. They form most times on the opposite side of your directional bias, like this and like this. This is for a bullish bias and this is for a bearish bias. You can see it, like if I'm gonna talk about how is it called? Like a bearish, how is it called? Bearish. Oh yeah, value swing. A swing low fails to break below the previous low. It's really easy like that. And for bullish is a swing high that fails to break above the previous high. And this is how I most likely use it as liquidity, and you can combine it. It's not one of the strongest liquidity magnets, but if the bias is right and your entry concept and your fundamental analysis and your other analysis are also right and come along with it, you can use it as imagine another value swing as a target or as an entry or something like that. Because I draw this purposely like this, because maybe it was end of the day or end of the week almost or something like that, and your target was above the value swings, and then you could have your target and shut down. This of course hypothetically, but I can show you like this. I will now show it in the chart. Give me a second. I found a really easy example on my chart just in 2 seconds, like this. This you can draw it like all the way to here, but I will not do it. Then you will see it more clearly like this. I can also draw it like this if you want it. This is like value swing, value swing, value swing, value swing. It fails to swing higher, so there is really low resistance. It's a low resistant liquidity one can be happening right here, and it broke out a lot of the value swings and shut down. After that, it broke to the highs. You can use it as liquidity magnets, like what I said earlier. They are value swings. They fail to make bullish momentum, and if they keep doing it, the liquidity builds up a lot above those value swings, and after a while they obviously gonna get hit and break, and that's what price does. And I'm also made a little example here on other scenario, on bearish scenario right here. You can also draw it like this if you want. You can draw it like this. It is really low time. This is like 30-minute time frame, I think. Yes, 30 minutes, but I'm gonna show you like this because you can find it anywhere. I'm not gonna find something specific to like 1 in 10 million or something like that, but I'm gonna show you like something that can happen every day. So I'm just, if you look like this, just about the equal highs, it was this trade, right? Like this one. I told you, I'm just scrolling a little bit farther and I'm seeing again this. I could also show you this example, but I'm going to go there later. But let's go again. Like this is something that can happen every day. It's a value swing. It's a value bearish swing, and the liquidity gets taken out and it shuts higher up. Look, after a value swings gets taken, it doesn't mean, if the liquidity is taken, doesn't mean it goes up immediately or goes down. That's the context. But if it gets taken, you can look what your confirmation is gonna be next. But you can see it like this. If the liquidity already got grabbed, you can look at higher time frame if something is up there or down there, or maybe your fundamental analysis says price will keep going higher or lower. What I'm trying to say is, don't ever think that after any liquidity magnet gets hit, it will just go up straight or just swap it and go down straight. That's more likely to happen what your bias is. Like if your bias is still really bullish and we look on the higher time frame and Trump, tariffs, everything looks bullish, then you can expect that price will just melt above it and go higher. Because if you're thinking about like, yeah, above the low resistance liquidity, I will just put an entry and hope it will go down like this. Yeah, if you can enter like on the high of this, but if you enter it like there, it just shot up, so your SL would get absolutely rated. Or like this, I'm thinking it's gonna reverse immediately after the low resistance, after the value swings. Yeah, probably you're gonna get SL. Look how many pips it moved down. Look for you. Yeah, I don't think you trade with 100 pips SL. I think most people trade with a 10 pip, like 20 pip, max 25 sometimes in this volatile market, but you're gonna get stop out. So, like I said in the first episode, never enter immediately. Look at your bias, at your point of interest, and look at your analysis, technical, fundamental, combine everything together. And I will teach you also that later.